Hello everybody. So today I want to talk about the Nebius Q1, ticker symbol NBIS, because they did really well. The stock is up 7% right now. So really briefly, as you know, Nebius is a newer company famed for having an investment from Nvidia, being an Nvidia partner, and being kind of the European Nvidia partner. Nebius is also really liked by the market and by me because they picked up the top management team of Yandex. Yandex left Russia, there was a spin-off, and they came and they created Nebius in Europe, and now they're running this new data center company in Europe, and they also have a lot of side investments, which in my view, when I look at enterprise value and I remove the side investments, I find a company that is very, very cheap. So let's focus on the core business. Let's talk about the core business. The core business did Q1 revenue, $55.3 million. December was 37.9, September 43, June of 24 was 24.9. So overall, the direction, the trajectory is very much high, very much high. We had a little bit down in December, but that's not really a trend, right? A trend, you got to look over multiple years, and we really don't have the seasonal patterns for that company just yet. What is great, though, is the guidance. I love a company that is not shy with guidance. They are right now at ARR, so annual recurring revenue of 250 million, let's call it, of ARR. So that means that most of that revenue is going to be repeat. There's a lot of repeat revenue in there that we're going to see over the years, and that is going to be ramping up. Actually, if you look at the ARR, they are actually at 310 million, but that wasn't today's report. But they were kind enough to give us in the presentation that they're already at 310 million annual recurring revenue as of the end of April 2025. And they are guiding two amazing things. So for the group revenue, they're guiding 700 million, which is the number that I took for a full year of 2025 in my spreadsheet right here. But at the end of the year, they're guiding between 750 million and $1 billion of core segment recurring revenue, which is quite impressive in my view. So the reason why I took 700 million in calculating that growth rate, because of course the valuation is all about the growth rate. What is the growth rate for me that you're giving the next 12 months? So because the next 12 months technically includes Q1 of 2026, I was comfortable using 700 million. If you think they'll achieve 700 million between Q2, Q3, Q4 of this year plus Q1 of 26, all of these 4 quarters, if you think they're going to do 700 million, which is more than reasonable given that the 2025 FY guidance is 700 million to the max, 500 million to the low end, so it's more than doable. What does that mean? That means that they would have a forward revenue growth of 335%, and that's guided. That's the guide. This is not the analysts. This is the guide. So I'm quite excited, and when I have a company growing this fast, do I really care that it's trading at 10 times revenue when you're growing this fast, when the company is going to be more than 3 times as big as today in December of this year? Do I really care if in 7 months it's 3 times as big? No, I really don't care about paying 10 times right now, because if the stock price doesn't move, then that means that in December you'll have a very cheap stock trading at like 3 times revenue or something like this in the hottest sector. And I can't keep emphasizing this enough. The narrative here is very strong. This is the hottest sector in the market, one of the hottest sectors in the market. I would argue the hottest sector in the market. This company is one of Nvidia's friends. As you know, I have 2 Nvidia friends investment. Nebius is one, SMCI is the other one. Anyways, enterprise value over GP over RG is a 0.25, but I think that number could be meaningfully lower if we assume that they're going to sell their stake in ClickHouse, for example, which is one of the investments that they have. And the rule of 40, of course, is entirely through the roof at 333, but that's only because they're growing so fast. The company is not EBITDA margin positive just yet, but they expect to be in the second half of 2025. 2025. EBITDA margin cash flow is not their priority as they are focusing on CapEx and they are investing a lot. And if you remember the last time I covered this company, they had over 2 billion of cash. Now they have 1.4 billion. So they've expended the money towards the growth. In fact, they are building new data centers. They emphasize a lot in the presentation their New Jersey data center. So they're building a lot of new data centers. They announced partnerships with we knew about these partnerships, but of course they reiterated the partnerships. The important one being Nvidia here. Meta, of course, is a top leader of AI as well. They got a gold tier certificate for their data center, which is funny because only Azure has that certificate. Other hyperscalers don't necessarily have it, like Google GCP doesn't have it, but Microsoft Azure has it, which is quite impressive. So Nvidia is working closely with Nebius, they're working closely with Microsoft. You can see this company associates itself with the big guys, and I can only say that this is happening because of Yandex, right? Because the CEO of this company was the CEO of Yandex. Yandex was the Google of Russia, right? So all of these guys, they know each other. They've been at the top for decades. They know each other. This is the only reason I can imagine. Nvidia CEO and Yandex CEO probably were talking long before the company of Yandex got spun off into Nebius. Well, it's not really a spin-off, but long before the top management team left Yandex to go into into Nebius. The relationships here are valuable. They know each other. That's why you can get these partnerships going. Anyways, the company is essentially debt-free, and they still have another 1.4 billion of cash that they will invest in the CapEx. What I find truly stunning is really those startups. I know that ClickHouse has been reported, and the stock went up when that happened. You remember 2 weeks ago or something. ClickHouse was reported to have a value of $6 billion. Now, that's the private value proposed on the latest founding round. But I've seen analyses of people saying it's actually worth quite a bit more than that, much more than that. Maybe not the whole company now that the stock is back up. Because, the stock kind of had a mini value of despair back in March. So maybe not the whole value of the company, but it could be meaningfully higher than even the $6 billion. And they own 28% of these $6 billion. So right now, that would be $1.68 billion. But I could see that double again, right? I could see that potentially be $3 billion if we wait a year, if we wait another year, because ClickHouse is right at the heart of AI. And of course, let's assume it doubles again, and let's assume we have a $3 billion stake. You're looking at a $7 billion company. So you could realistically say maybe 2 years from now, half of this company can be explained by the stake in ClickHouse. And ClickHouse is not the only side business that they have. They have a few small businesses that don't really matter, like an education business, but not Toloka. Toloka got an investment from the family office of Jeff Bezos. And this is AI data, right? This is data for trading AI agents. And that's a high growth business. And then you have AV Ride, which is an autonomous company, which, of course, my stance on this. My stance on this is that Tesla is way ahead of the lead, and the valuation of a lot of the competition of Tesla is overhyped. But nonetheless, they are one of the players. Along with Waymo, they're one of the smaller players in the space. Nonetheless, not everybody agrees with me that Tesla is the best, and so you're still gonna have a valuation perhaps in the private market. They can still potentially sell AV Ride, and they also have an interesting delivery segment with these little robots that do delivery. So by all means, that is valuable as well. It's just in the private market it's valuable. In the public market, I'm not sure it would be that valuable. But the point is, those startups almost make it like a small private VC. You're owning a small VC. It's a little bit like buying Google and you have Google Ventures. Well, if you buy Nebius, you have these side ventures which really have separate management teams, even geographically, right? For example, AV Ride the management team is in Austin, Texas, for example, and they operate separately, and they add value to the business. So this is some meaningful stuff that they were able to bring back from Yandex. And of course, and I will conclude with this is what makes me so bullish on this company, is not only Nvidia contributed majorly to the 700 million capital raise that they did in December 2024. So Meta has a financial interest in Nebius, and that's a really big deal. But of course, no surprise, when you have a financial interest, you're going to promote your own company where you have a financial interest. So if you go on Nvidia's website and you go reference platforms, right, and reference NPC, you see that Nebius is one of the top platforms, quote unquote, recommended by Nvidia. And you even have a little presentation here. Why would you want to choose an NPC, NCP? Why choose the partners? And clearly, Nebius is being shown as kind of a European-based partner, and that's who Nvidia is talking about. Nvidia is saying, oh, you should go to see Nebius, and like I said, they're doing their advertising for them, right? Nvidia is doing Nebius's advertising for them. So if you're interested in AI, you might pick one of the five, and you might pick Nebius, which is a big deal. And so this partnership is helping, and it is helping further because, of course, the AI factory, which Jensen discussed at Computex, quite a bit. That AI factory is going to be offered by Nebius, and Nebius is going to be one of the first companies out there to offer the Blackwell AI platform factory, the Blackwell AI Ultra factory, which I think a lot of people are going to want to have access to, because this is a race to always having the newest and best GPUs and the newest and best setups. So I find this company to still be cheap. I wish it was still trading in the mid $20. Unfortunately, it's like back above 40 slightly as I record this. But this is definitely a green flag. Definitely everything is going well, and I love it very much, and I look forward to seeing it keep going up. So anyways, this was not investment advice, not financial advice. This is just entertainment, hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.